Aloha, everyone. Stocks had a pretty decent session on Tuesday. Strong session overall. The only mitigating factor to today's strong session was the close, as we were unable to go out on the high of the day, selling off in the final 10 minutes. But solid day. Unfortunately, the Nasdaq has now ran right into the August resistance levels, which is right near the 250-day moving average as we near a death cross. And with volume being heavy the day before, that's good, but look at how well below average it is. As we go into the FOMC meeting and the Fed announcement on Thursday, I don't like what I see. This is very wedging. Tell you what, like if this pattern was kind of working itself kind of lower with this lower volume, oh, you better believe I'd be much more bulled up, if you will, expecting prices to rise. But the way that we're wedging into the 50-200-day moving average, to be honest with you, it just looks like we're setting up for a better short opportunity. However, I've been doing this long enough to know that that would be absolutely foolish to accept that that's going to be the final outcome to all this. And I am ready for the market to even break out higher if it wants to. And we actually have quite a few long signals tonight, all in very low volume stocks, thin stocks, which shows me that while we're going through a change in leadership, it's very clear that we're going through change leadership because most of the stocks that are making my scans are all extremely low volume stocks. And that means that the bigger boys are rotating into smaller names that institutions are going in and accumulating as we go through a weak market period. But if these long positions don't work and we do sell off again and try to retest those August lows, watch all these names and watch how they hold up, because it could be indicative that we are definitely rotating out. But for now, I'll get to those long positions. Let's continue to go through the market. The S&P 500, the Nasdaq is by far the best looking index. You can see the S&P 500 still, but hasn't even come up to the early August, late July lows. It still has the resistance levels of just the most recent move off those 824 lows to deal with, much less the 50-200-day moving average, the early August and late July support levels. And once again, the Nasdaq's just wedging higher on lower volume. Historically, price-wise, it's not good. And historically, price-wise, it also shows that even if you do break out from this kind of low-volume consolidation range, the breakout normally acts like this. You get a rollover. Look at this, low-volume breakouts. You broke out for a little while to a new high back in February, but with no volume, you rolled right back over. You tried to break out again in April, you roll back over. May, you try to do it again. June, you try to do it again, and finally, all hell finally breaks loose. So it's not very good to see rallies on below average volume. So just keep that in mind, everyone, for everybody that thinks that, okay, well, there's more bears than bulls in the Investors Intelligence Survey. The VIX went over 50 on A24. We have hit a bottom. You know, if the VIX would have hit 100 and the bears were at 45% and the bulls were at 25%, yeah, man, let's start looking for a bottom. And even then, the indexes could easily sell off another 20%. But for right now, once again, early August resistance, July resistance, 50-day moving average, 200-day moving average, small cap indexes. This is not a bullish setup yet. If anything, to make this a bullish setup, I want to see us retest those 824 lows. So until then, I'm completely on the sidelines. Our market models are all on across the board sell signals. There isn't one single index that isn't under a sell signal. There was one action today that I did notice. The Dow Jones Transportation average retook its 50-day moving average. The IYT had large volume on its retake, but it doesn't matter for right now. Oops, you're going to need to see confirmation on that index. This index is still under a sell signal, and with the 200-day moving average declining, we're going to have to at least take out these August highs right here and the 200-day moving average before it even goes to a neutral signal. That's how weak this market is. My models are based on over 150 years, almost 200 years of price data that goes even back to futures market. So I trust historical price data. It gives us highest odds to know what's going to happen. Doesn't mean it's always going to happen. That's why you need to have contingency plans. But if you're not prepared for a move either way, you're going to eventually get caught on the wrong side of the market. And speaking of that, some of our hedges did. That VIIX hedge that I put on at the end of this session on 9/9 failed today. Thank God for stops, because here's why. Once again, we get stopped out of stocks. Tree screwed me over. Look at what Tree did today. Damn it. I got knocked out here. My low a day was back here at these lows, and I got knocked out by just a few pennies, few cents, a dime or whatever, and damn it cost. But whenever those stops are there to protect you, and so as soon as it went below 34.12, I was knocked out. This thing is now at 31.70. It basically has a 31 handle after hours. So, you know, thank goodness for stops. But VIIX is a full sell on an end-of-day basis if you have not completely sold out yet. PSQ is also a full failure now. The final sell stop level was a close below 56.28. As you can see, we're closing at 55.79. I was knocked out way back here on 9/9 of my PSQ positions, but so I'm already out. But PSQ is a full sell. SDS closing below the 20-day moving average on above average volume. I've already been completely knocked out, but that's a 50% sell on an end-of-day basis. DXD, my limits did not get hit, so I didn't get long DXD, but if you are long DXD, this is a 50% borderline sell. Not quite yet what you want to do. It is closing below the 20-day moving average, and the reason why it's a 50% sell with the low volume is just because we just had a huge gain just get wiped out pretty quickly. So it's going to go ahead and be what I would consider end-of-day 50% sell, but technically I would put the sell stop below 22.83, which is basically where the low a day is today, 22.84. So DXD 50% sell, and then TECS closing below the 50-day moving average on above average volume. That is a 50% sell, and TVIX is closing below the 20-day moving average, and that is a 50% sell. And once again, a big gain, like 124% taken away, you know, to where it's only a 50% gain, and that's pretty insane. But unfortunately, that's the first legitimate sell signal. To have thought that you could have sold it before and that would have been right would have been premature, because let's say this thing then breaks out from here to 27, you would have regretted taking profits. It's a system. It's never going to be perfect, but TVIX 100% sell, or 50% sell. Now going on to the new long positions, 4 of them. The first one, all these are super thin. DHILL was the first one to show up in my scan. You see the huge volume surge today? Do you know how much it ended up trading today? Only 45,000 shares. That's right. This thing averages under 10,000 shares a day. This is a limit. They're all limit order only stocks, but this is an extreme limit order, and I would also put buy limit stops also for that limit order, just because this is a thin stock. I really even hate giving it out, but this is what I do for a living, and I have a website, and I believe in honesty and transparency. So DHIL, that's a new long. It was only in the CanSlim scan, so it's only 1%. And then UHaul, once again, extremely, extremely thin stock. Averages under 40,000 shares a day. Pocket pivot point signal. Don't risk much if we're wrong, as long as we don't get an ugly gap down, which we probably won't. But UHaul also very high price stock, so that kind of tells you it's quality nonetheless, a $380 stock. But UHaul, once again, CanSlim only, so it's 1% limit order only, no market orders. And then EFSC, CanSlim quality stock. Told myself I wasn't going to go long it initially because it didn't have green BOP, unless it was confirmed in my price volume BOP scan. It has enough volume, so it is confirmed in the price volume BOP scan. Pocket pivot point signal right off the 50-day moving average. 1% for being CanSlim, 0.5% for being price volume BOP surge. So EFSC is a long. And then the next long is AFAM. Not really a long signal on today's pattern alone, but it had a pocket pivot point signal the day before, and I was kind of interested in possibly taking it yesterday, but I didn't close above 46.53. Today it's closing above 46.53, 46.97. It reminds me of ABMD whenever I went long. If you don't remember, it had a pocket pivot point signal back here. The next day it finally broke out on low volume. I went long. ABMD continues to work, and I'm still long. AFAM, we'll see if it's the same thing. 1% for CanSlim, 1% for Perfect Special.